Grant Mercer. This is Storm Stock Solutions, and welcome to your pre-open rundown. Futures are quiet, but under the surface there's a lot of debate about bubbles, crypto's latest kraken up, and a fresh shot of AI and China risks swirling around tech. Let's bring a little clarity to the chaos before the opening bell. Let's start with what's driving the conversation. According to reporting from MarketWatch, Bitcoin's sharp November slide is being framed not as some random macro event, but as the product of a hype machine that pushed prices higher and then left latecomers holding the bag. The key takeaway for traders this morning isn't just crypto itself. It's the playbook. Heavy leverage, social media cheerleading, and then a fast reset. Whenever you see that pattern in any corner of the market, it raises questions about how much of the recent run-up is durable, and how much is just momentum and marketing. That ties right into another widely shared piece from MarketWatch's Mark Hulbert, looking at investor sentiment and whether bubble fears might actually be justified. He points out that, before the dot-com and housing busts, there was already broad concern that things had gone too far. We're hearing similar chatter now around pockets of US equities, especially the big growth and AI stories. For today's session, that doesn't mean a crash is imminent, but it does mean dips and rallies can get exaggerated as positioning is crowded and nerves are a little frayed. Now, on the opportunity and strength side, most of the specific winners we're seeing are more stock by stock than broad sector waves. One name traders are watching closely: Nvidia. MarketWatch reports that its shares are getting a lift after President Trump signaled support for allowing some China sales to resume. Nvidia had previously estimated it was losing roughly $8 billion a quarter in China revenue due to restrictions, even on scaled-down chips. So any thaw, even partial, reopens a massive addressable market and puts semis and the broader AI supply chain back in focus. For day traders and longer-term investors alike, the question into the open will be whether that enthusiasm stays confined to Nvidia or spills into other chip and AI hardware names. We're also seeing index-related strength. The financial name Ares is surging after being added to the S&P 500, replacing Kellanova. These index reshuffles matter because passive funds benchmarked to the S&P have to buy the new entrant, often creating a wave of forced demand. That's not a call to chase anything, but it's a good reminder that sometimes the catalyst is mechanical, index inclusion, rather than a big shift in fundamentals. On the flip side, there are some clear areas to handle with care. Crypto-linked stocks and high-beta tech names have been tethered to Bitcoin swings, and the narrative that the November crash was no accident puts a spotlight on how much speculation is still sloshing around. If Bitcoin stays under pressure or volatility spikes, traders will be watching for spillover into exchanges, miners, and even some of the more speculative fintechs. More broadly, that MarketWatch piece on bubble worries underscores a fragile backdrop for richly valued growth. When everyone's talking about bubbles, you tend to get sharper pullbacks on even modest bad news. That can show up as intraday air pockets, thin liquidity, fast drops, and equally fast reversals. Areas like mega-cap tech, story-driven AI plays, and some high-flyer international ETFs mentioned in the Warren Buffett style, moving out of US stocks article are all parts of the tape where sentiment can flip quickly. Let's talk sleepers. Names and themes I'm watching in the background. Nvidia is actually on that list as well, not as a brand new idea, but because the China angle could become a bigger macro story if it evolves into a broader reset of export rule. If this morning's optimism turns into a multi-day move, it could reignite the IAA plus China reopening narrative into year-end. That's a watchlist concept, not a buy or sell call. The homework here is about understanding how sensitive key chip makers are to geopolitics and regulation. Outside of the pure trading tape, a cluster of personal finance stories is also telling you something about the environment. MarketWatch highlights younger men skipping the 401k and banking on Bitcoin, and separate pieces about estate planning and complex family real estate situations. When households lean harder into speculative assets and push off traditional planning, that's often a late cycle signal. Risk appetite is high, confidence is high, and people assume today's conditions will last. Professionals will be asking whether that mentality is creeping into the equity market as well. So, heading into the open, the setup looks like this. Sentiment is edgy, bubble talk is loud, crypto is a live wire, and AI-linked names, especially Nvidia, are the early focal point. The key questions for today: does the chip and AI complex take the baton and lead higher, or do concerns about speculation and bubbles keep a lid on risk? I'll be back with intraday updates once the market gets moving to see which of these stories actually take control of the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions, I'm Grant Mercer. Stay sharp, stay steady.